Good morning and welcome back, everyone, to the Schwab YouTube coaching channel for our Wednesday edition of Trader Talk in today's market. I am your host, Kevin Horner, joining you from a beautiful, as always, Denver, Colorado. Today, pleased to be joined by my friend and fellow Schwab coach, Brent Moores. Good morning, Brent. Happy Wednesday to you, man. How you doing?
Uh, I'm doing good. Glad to be with you here today. Glad you're in town. You go to workshops a lot. That's great for everybody out there, but we miss you here, and so we're glad when you're here. And so looking forward to talking about markets with you today.
Yeah, I appreciate that, Brent. I'm looking forward to talking about markets as well as we kind of dive back into things here. For me, when I get a couple of days off, I tend to take a little bit of a break from the market. So it's going to be good to look at some charts with all of you. This morning, we're joined by our friend Barb Armstrong there in the chat. Barb, of course, is a fellow coach. You can ask comments or place your comments and ask questions there in the chat. Barb will get to stuff that Brent and I are unable to get to, but we're going to keep an eye on things there. As you know, we'd love to hear from you, so please don't hesitate to post for the duration of our show. Remember to follow us on X as well. We are all there individually posting for you throughout the week. Kevin Horner, CS, Brent Moores, CS, and and Barb Armstrong, CS. The best place to find us, everyone, when we are not hosting classes for you here. So with that, let's jump to our disclosures and we'll get right to the chart. So first of all, please remember that everything we discuss for you today should be considered informational and educational exclusively. We're not here to make recommendations, of course. We're not endorsing any specific approach to trading here. What we are offering up is education of the markets and technical analysis. Now, please remember, technical analysis should be simply one of your decision-making pieces, should not be the entirety of your decisions. So make sure you're basing decisions off more than simply technical analysis. And here in this class, everybody, we get started with a top-down review. So we start broadly. We'll hit up our major indices. We're going to look at the S&P 500, the NASDAQ 100, the Russell 2000, probably extend that out to look at some very important areas of the market, like oil, of course. But we'll work our way down through sectors and sub-industry groups, see what's moving, all the way down to individual equities for you today as well. So with that, we're going to kick it off, as we always do, with the S&P 500. Brent, one of the things I think we traders we get a little bogged down by are some of the speed with which some of these moves occur. And you see a big significant move in the S&P off of that low we created the end of March. And the thing that stands out to me here is a 13% rally, Brent, has really been followed by nothing more than a pause.
Yes. Yeah. I mean, it's not surprising that it's not continuing to go up at the rate it's been going up. But one caution I often make to people is, and it's not really panning out in this case, is when something goes up really quick, it can be very volatile and come back down, retrace pretty quickly. Well, it didn't really do that at this point. Now, I don't know what the next, week or two or whatever holds, but right now, hey, it's pulled back a little bit. We're up today. In fact, when we look at sectors later, it's broad-based, the move
Mhm.
up today. So, but in terms of this chart, yeah, a little pullback, but a little bit of a, I don't know where today's going to end right now, but a little bit of a bullish harami right now, I would say.
Yeah, exactly. And let's just remind our viewers what we're talking about when we see when we say a harami. It's just currently the day's price action engulfed within the prior day's price action. It's bullish because it's green on the candle, so we are up versus our open. Got a nice start, up about 3/4% here. As always, everybody, it's about managing our risk. As you all know, one of those key ways that some of you traders will do that, you might zoom in just to what's been going on the last few months. Take a look at that low we created. So we basically yesterday we got into the gap, we filled it all the way down to the high of the move before the gap. So we had that as a tested and held level. That becomes an area where some traders will look to manage their risk, so to speak. Maybe a trade through this ledge would be reason to reduce position
Yeah.
size as one area. Brent, if you're going to use a trend line, it's going to be a pretty steep one, though, if you're going to go like that. But ultimately, it's always about pegging those levels, Brent. Know where you want to move on, know where you need to make some changes. Any last ideas on the S&P 500 here
No,
initially?
I mean, Kay Brown said in the chat, flat for a while would be good. I always kind of think that is like, hey, if we've had a big move up, I know that it's not going to continue to go at, the pace it was going, but I'd I'd rather have flat for things to kind of catch up for it to breathe than for it to go down a lot. Now, who knows? It may still go down, but right now, yeah, know your levels, know your levels that you're going to act on. Think about what you're going to do
Hmm.
if the market pulls back. Maybe that's setting stops. Maybe it's easing up on positions. Maybe at a certain point, if it's adding in some more position if it drops back far enough.
Sure.
But those just to have those things in mind when you're going.
Yeah. Exactly. As always, Brent, know where it is you would like to, deploy some new money, be prepared for moves that we see frequently. I'm watching here the prior highs. This is another horizontal level. So if we saw some short-term price action that broke the trend line or something, for example, maybe it's the level of former resistance, now potential support that provides an area where traders would look to maybe add some funds here, somewhere in the neighborhood of 69.70, for example, seems to be one of those spots. So we'll see. Okay, let's kick it over to the NASDAQ 100. We're going to see some similarities on this chart, everyone, because of course we're following the same patterns, right? That we've had the gap moves that provide for us areas of or levels at which we can manage our risk. This has been consistent. It started back with the so-called Tuesday trade, the big gap we made back here in early April, and it's really just started running. So again, same thing here, Brent. Gap level seemingly providing short run support for us, another level beneath us. But the optimism certainly is palpable here at this point in the face of numerous risks, Brent, which seem to be falling by the wayside each day, according to the market at least.
Yes, and according to the market, and that's all we're doing. I mean, you can turn on your news source 24 hours a day, and you know what? It doesn't matter because
Hmm.
because ultimately the market will tell you what the market feels about things, and doesn't mean it's going to be right. Doesn't mean it won't shift, but that's the only thing that we can look at is what the market is doing. Now, when you're talking about support levels, just kind
Hmm.
of look real quickly. When a price hits a certain point multiple times and bounces off that, we'll typically call that a support level or a resistance level if we're below it. Uh, if the stock gaps, usually that's the opportunity for a new support level. If we have a trend line where you can connect the lows or the highs together, that can act as support or resistance. Moving averages can act as support or resistance. Kind of nice round
Hmm.
numbers can often act as support or resistance level. So there's no special trick to finding support levels. You don't need a
Yeah.
program to tell you where they are. Visually, it just takes some practice. So, like when Kevin is showing you, hey, we're looking at a support level here. It was a gap. That's a support level. We look at these recent lows. That's a support level. Just kind of start looking at those on your own, and I think they'll come out to you, and you'll say, well, that's a potential support level. Doesn't mean it's going
Yep.
to hold, but those are the levels we look at.
That's the idea, and we talk about this part of it, Brent, all the time. We don't know which one of those levels is going to matter. It doesn't predict future. It only allows us better understanding of how we individually, for our specific trades, can manage that risk. Where do I maintain comfort? Where do I get less comfortable? When I'm less comfortable, should I be making smaller positions? Should I be trading less? These are all things that we have to kind of learn on our own to a certain extent. And often the case, everybody, regardless of how many times you might have heard us say the same thing over and over here in this class, seeing it in live action is when it really starts to solidify your learning. So make sure you're paying close attention. You don't have to have your own money on these trades, obviously. You can still work with, when you're thinking about the market, work with your paper money side of things as you're developing your own comfort and your process for trading. But ultimately, defining our comfort for risk, our tolerance for risk, staying with things as long as possible, working with the longer trends rather than the shorter trends can often help us out. Now, in moves like this, where the NASDAQ, and we're going to see it here in the Russell, these moves, I'm put up the 10-day moving average, which tells us just how speedy these moves have been, Brent. So we are holding very quick, very short-term moving averages here broadly, and you know that's a good sign. It's telling us that price action staying elevated, which we like. But it's the key is to know where you would make those changes, Brent. Right? Using that 10-day, what steps would I take if things changed?
Yes, and so the shorter term moving average, if the longer we stay above the shorter term moving average, that's showing the strength of the current trend. Whereas like if you're looking at a long term moving average, say a 100-day moving average, 200-day moving average,
Mhm.
then it's easier for it to stay above it for a while, I guess is the thing. And it still doesn't mean it's not a significant level. It is a significant level, but it just shows it's a little less as to the current strength of the trend over the past, month or whatever. You can see that reflected in the RSI at the bottom of the page as well.
Sure.
Um, it's when you're getting above that 70 level, you've had a very strong run up. And that may be kind of a little bit of a flag of, hey, we've had a strong run up, and uh, maybe we need to adjust to stop or something like that. And when I say
Mhm.
stop, just realize stops don't guarantee an exit at a particular price, but it's just maybe a little bit of a red flag for you to think about things here
Mhm.
and how you're going to manage those. And I guess the other thing I would say is you can look at different time frames too. I mean, we can see the short-term run
Sure.
here that we've had, but as you're looking at these, that's an all-time high we're at, folks, which is or very, very close to it. Uh, that's that's significant, and it just shows the strength of not only the current trend, but it also has something to say for why people, a lot of traders like equities. And
Mhm.
this isn't a prediction of the future, but over history, and this is a 10-year chart, but you can go back even farther if you want in time. Over time, equities have had a have gone up. And
Mhm.
there's times of pullbacks, there's times of very painful pullbacks. In fact, at the beginning of this chart here, there was the kind of the dot-com tech bubble there, I think is what that's
That's
showing
this one.
there. Yeah. And then we had the financial crisis in about 2007, 2008. There's a pullback. Those can be very painful during the time. And then of course we have COVID and whatnot. But the point is, the reason why a lot of traders keep a large percentage of their portfolio in equities is over time, historically, they have tended to go up. Now, individual equities, that's not true for every individual equity out there. Of course, some stocks go under completely,
Yep.
but um, that's just why that just explains a lot of portfolio allocation there.
Yep, that's true. And I'm always reminded, Brent, as you put it, we need to often pull back the curtain a little bit, look at the longer term, and in that way be reminded what is most commonly, at least dating back to 2010, sir. I mean, we're looking at a 16-year run here. That blue line is this is a monthly chart, by the way, now. And so if I apply my 200 moving average, it's now a 200 month moving average that we're looking at here. So the blue line is exactly that. And you can see, look, if you were looking at this on a daily chart, this would still tell the same story. The trend line in blue has offered us opportunities to participate in the trend at what are considered to be lower risk areas within it, right? You pull back to the trend line. Is it comfortable? No, but it becomes an opportunity quite commonly. And, that's the evidence is in the tests. The drawdowns
Yeah.
are very clearly marked. And, we've been below it, very limited in scope on a month-to-month basis here. So always a good idea, everybody. Pull back that curtain, look at it from a larger distance, and take a peek at what's going on, because we can learn quite a bit by just changing your time frame quite frequently, as it turns out. Let's jump to those small caps, everybody. We've been talking about this because, again, similar situation deployed here, Brent. Big upside moves, gap levels achieved, new areas to manage our risk.
And near an all-time high again. So,
Yep.
it's kind of a broader market participation in terms of market cap spectrum. Uh, doesn't look the exact same as the NASDAQ or the S&P 500, but the same principles apply in terms of moving average and trend and support and resistance levels. And this strength reflected in the RSI. And so, there we go. Of course, as we say, and we've said before, a lot of this is going to come down to what goes on in the world and geopolitical events right now. It's not always geopolitical events. That's the focus right now, right? What's happening with Iran right now. But sometimes the focus is more on inflation or unemployment or retail sales. You can go on the list there. Just realize that, that's the focus right now. And of course, we're in earnings season right now. Earnings season is heating up. A lot of companies have announced even more coming forth, including a lot of the mega cap companies that can affect the trajectory right now. But nothing right now seems to be playing as big a role as the price of oil and the geopolitical events that are going on.
Yeah, that's so true, Brent. And yet, the movement we talk about from some of those negative narratives doesn't seem to be sticking as it relates to the
Right.
market. Our moves here, essentially, we're taking any positive news from the administration, from the idea of peace talks, or in this case, the extension of the ceasefire. These are the things that the market is using to rally higher, and doing so in the face of that concern. You're all out there thinking about the inflation risk and overall risk in the market. And listen, we absolutely should be, because that should help us properly position ourselves. But recognize what the market is giving us, and that is continuation of the rally. Use the rally to our benefit. If you're uncomfortable in the rallies, take your profits more quickly. There's nothing wrong with that, but just recognize what the market is doing. And, we often say, Brent, that the market will climb a wall of worry. There's a lot of worry happening here in the market broadly, and yet we make our ascensions higher. So I just think it's important that we recognize that bias in the market. If we start to fight against that bias, that's when we get into trouble. Even yesterday is a great example. You had a horrible candle. What you could definitely detail, Brent, as a horrible candle yesterday on the Russell, and it doesn't seem to matter. Today,
Yeah.
we're back up. We got this bullish day happening, optimism once more. So again, important to recognize these concepts, Brent, I think.
It's really interesting because right now, when there's really bad news that comes out, the market will have a sell-off of the day, it seems like. But when either there's some good news or if there's not much news coming out, the market's been rallying. And of course, one explanation for this is the market tends to be forward-looking. And so it is anticipating what's going to happen in the future at some point. And so maybe the bad news kind of factors in, but people are kind of dismissing it as this is short-term bad news, but in the long run, things will get resolved and things are going to turn out fairly well. And the market's, that seems to be what the market's saying in terms of the price performance, because that's the only thing I could think as to why we'd be right on the edge of all-time highs, given all that's come out. Now, of course, I don't know
Hmm.
what the future is going to hold, but I do think it seems to me the market thinks the future is fairly bright there,
Right.
but who knows? Reality sometimes turns out different than what expectations are, and sometimes the market gets it wrong. And by the way, let me just point out, a little side note, there's a survey link in the chat. I just wanted to point that out to everybody. We
Yeah.
appreciate your feedback. So Barb has pinned that in the chat, I think there. And we just, appreciate if you'd give us some feedback. There's just a couple questions and then some opportunity for, things to discuss or some where you can write out some more feedback if you want. You don't have to though.
Hmm.
So we just appreciate you guys.
We definitely do. Thanks for bringing that up, Brent. Yeah, it's pinned to the bottom of that chat so you can get to it easily. Takes only 60 seconds if you'd like to give a score. Your comments are always appreciated. Those come directly to us. Brent, this is probably as good a time as any to take a look at what's really driving things. Um, you know, oil, obviously. Let's talk about oil. So
Yeah.
we're going to bring up the future symbol on oil here. We're not going to discuss futures from a standpoint of trading everybody. Certainly not recommending that you should be considering trading futures. What we are going to do is look at it from the trend standpoint. And I find it pretty notable, Brent. We found the 50-day moving average on the pullback here. If we take a look at just the most recent high, excuse me, we've had a pretty good drawdown, but it's obviously tied to all of these conversations around the ceasefire, the opening of the strait, so on and
Yeah.
so forth. So, most recently a 27% move backward to the 50-day moving average. Now we're moving off of it to the upside. So the question here becomes, does the ceasefire conversation extend? Do we get a further breakdown in oil, or is oil rallying to hold a level after having held, excuse me, a level of support here, Brent?
Yeah, and we're about the $90 level. It's enough that, obviously it's elevated. And look, it's just going to be a matter of it's going to stay, it's likely to stay elevated for a while, even if the news kind of gradually improves in the Gulf. Uh,
Hmm.
but probably not to this level if things improve. This is factoring in disruptions right now in world global oil supply.
Right.
But if it gets worse, would it be surprising for it to go back above 100? No, we're bouncing off that 50-day moving average. And so, you can use technical analysis on oil futures, but just realize even more so than other things, this is going to be dependent upon just news that's, headline
Yep.
news on that.
Can't get away from that, Brent, but we should nonetheless let us look at oil from the standpoint of what the futures can tell us about
Yeah.
expectations. Let's
Yes.
go to this trade tab up here, Brent. I'm going to click on this and it's going to open up the futures, the detail for the next few forward looking months, notably here, June, July, all the way out through October. Brent, there's some pretty clear discrepancy here from what we're trading at today, around 91.70 a barrel, versus what expectations may be according to traders merely out to October, about a 4 months out here from this
Yeah.
window.
Again, we're not talking about trading oil futures. We're just
Right.
talking about what the pricing is telling us. But with futures, what happens is the normal state we'd call like contango, where usually the further out you look, they're more expensive. Like with oil, there's a
Hmm.
carrying cost with it, and you'd expect them to be more expensive going out in the future, everything else being equal. But if you look at the difference between the early expiration, 27 days, oil futures are at about $91 a barrel. Go out to 153 days, $78 is what the price is. That's what we call
Hmm.
backwardation. And what that's telling us is the futures market is anticipating that oil prices will drop over time. And I'm not saying the next week or two necessarily, but over time, there's an expectation in the futures market that the price of oil will go down. It
Mhm.
may or may not happen, but I think that is an interesting look at what
Yeah.
the future is kind of what some traders are expecting about the future.
Yeah, and I think you hit the nail on the head. We're not certainly predicting anything here, but this is how traders are looking at it for sure, right? Traders are positioning for these types of moves. You would expect oil to get lower in the face of ceasefire talks, opening of the strait, so on and so forth. But it's not. I think what else this points out, Brent, 150 days is not a small window of
No,
time.
it's
We're
not.
talking, right? That's a
Yeah,
long
it is a
period.
long
So we're
period of
talking
time.
about oil improving in price, but it's going to take a while.
It is. And if you're like me, I kind of just and this is maybe a window into my soul here. I'm kind of pessimistic. And so when I hear talk of ceasefire or oh this announcement from the administration or something, I kind of I have to admit I'm like, well, we'll wait and see what happens because I don't think it's going to come out this quick resolution version. I believe me, I certainly hope I'm wrong on that, and I'm sure I will be at some point. But right now, I discount, so to speak, news that the idea that things are going to get resolved quickly there.
Right.
And I think the market does that as well. I think that's one reason why oil prices are still fairly high. But in the
Hmm.
future, and by the same token, I would say over a long period of time, I am a little bit more optimistic that things are going to work out here. And so I guess in that mind, in that way, I'm kind of reflecting what we're seeing in those oil prices in the futures.
Yeah, and I'm seeing some comments in here about having tried to play this. It's a difficult balance to say the
Yeah.
least. You can be right on directional move and absolutely get stopped out because the
Yep.
volatility has been pretty high. So you're not alone there, Kelly. I've been there, obviously. But again, remind yourselves of what you're up to and how you're going to process that trade. Remember, in scenarios like this with an elevated VIX relative to what we normally reside at, it makes sense to give yourself a little wider berth. We talk frequently in one of my other classes, the Tuesday class, where we talk about building a stock portfolio. We talk about utilizing the average true range as a method of placing our stops below our areas of support. So just ways to increase the likelihood we can stay with our positions a little longer and trying to manage risk a little differently. Smaller positions can also be helpful, as we've noted. So, take these things to your own process, customize them to your liking, to your comfort. But these are just, risk management techniques that we all of us traders really need to employ as we are trading. You're going to get some trades that go against us. That's just the nature of the business. But we got to take our chances every now and then when we're feeling confident about it. Brent, I wanted to move over to the Market Watch tab here, take a look at our leadership positioning because things have changed quite a bit of late. And I'm going to look at, first of all, the 20-day change, which is going to reflect a significant swing from what we had been witnessing previously, Brent. It's nice now that we've got all 11 sectors in the green on a year
Yeah.
to, or on a 6 month basis, excuse me. But really, Brent, everything in terms of our risk on trade in the last month has
Yes.
shifted with tech, communications, and discretionary in the lead.
Yes. So just to give a little color to those who are maybe a little bit newer on this, some different sectors perform better at different times. And sometimes they follow kind of a standard thing. And it doesn't always go this way. But when the market's doing well, a few sectors tend to outperform. And technology's one, communications, discretionary. That's those goods that people buy just that are more discretionary. They're not the must-haves, so to speak. And some
Mhm.
sectors tend to underperform during those time periods. And those would include things like staples or healthcare often, or utilities. When the market's not doing so well, it's flipped. And some of those companies, some of those sectors tend to do better during those periods of time, such as staples and healthcare and utilities. So this is kind of a classic rotation that we're seeing right now that very often it doesn't occur. When I say classic, it doesn't mean it happens all the time or most of the time, but this is what we're talking about when we talk about kind of a cyclical rotation. Now, the
Hmm.
one that kind of sticks out there is energy. Well, of course, energy, think of oil, that's one component of it, blasted off so far. And then over the last month, it's settled back down, which is why that seems to be the laggard there on that. But notice today, everything's in the green today on that. And over the last month, everything but energy has been in the green.
Yeah, it's interesting because the energy looked like an area for exposure. Like we pulled back. Like we talked about the oil barrel, right? We came to an end zone around the 50-day, and then the ceasefire discussion over the last week provided further downside pressure. So we pushed energy lower, but we got a good bounce, an interesting spot, and now we're back into the 50-day. So question now about trend once more, Brent. Can oil get a foothold? Does that mean energy can get a foothold? And can energy get back in gear? Right now, energy still had a fantastic year to date move, not the 40% move that we were seeing just a few weeks ago, but nonetheless, a positive development for the space. I guess the question is, Brent, are we going to get this back on trend, back above the 50-day anytime in the near term here? And that just remains to be seen.
Yeah, it does. We'd like to see above the 50-day, above, which corresponds kind of to the bounce we had kind of late February, maybe, if I got my time frame right there, kind of almost forming
Yep.
potentially a big head and shoulders there on that. Um, but that's, the jury's still out on that one. So we'll wait and see where it
Yeah.
goes.
Yeah, you're right. We would be looking for the potential development of the right shoulder, and that's going to happen on a continuation bounce. Basically, you're going to have to very commonly, is what I should say. Commonly, what we see is a bit of a volume spike as we move higher into the building of the right shoulder, and we commonly will see, Brent, that the right shoulder is traded higher. So if this is the left shoulder, we might actually be on the lookout for a right shoulder that trades above that level to create that visual, if you will. Doesn't mean we're going to get it, but if we did, it could be a potential development that some traders would take advantage of the other direction.
Yep. Yep.
So, as we take a look here in the sectors, I'm just taking a peek at our time. We've got about 12 minutes remaining here. Let's just look at a couple more of these key sectors that might be in bounce opportunities. So I'm going to bring us down the list. We're going to peek in on discretionary, which seems to be offering a bit of a bull flag. Brent, again, I think it's important to remind ourselves that the groups that were most beaten up are the groups that have rallied strongest. And again, those are the same groups as you just called out that are more or less those risk on areas of the market, discretionary communications technology.
Yeah. And I mean, yes, we've kind of flagged, we've, it's pulled back just a little bit. But after, given the run that we've had, not surprising. Now, it would be interesting if it does indeed continue in a bullish manner. And this is kind of a bullish from a traditional technical standpoint. Doesn't mean it's going to happen
Mhm.
that way, but from a traditional technical standpoint, this is more of a bullish pattern right now. And so if it goes up, what's it going to do when it starts to encounter some of those highs that we saw earlier in the year and into last year? Will that act as a resistance level? Well, we'll see. I don't know, but part of it may be earnings. We got a
Mhm.
lot companies coming out with earnings and whatnot that can affect some of those, especially as when we start to hit, so far in earnings, we've had a lot of financials and stuff, but as it kind of goes across the spectrum there into some of these other sectors, that can certainly affect the performance here as well.
It absolutely can. And never allow short-term price action to dictate a shift to your mentality. And I mean what I mean by that, I mean you can utilize new information can help you to make maybe take a different approach to your existing trade. What I don't want you to do is to become more necessarily a whole lot more comfortable with risk based on some of these moves. What I'd prefer is that traders take advantage of these moves elevate their exit strategies, utilize the possibility of a pullback as a means of generating more cash, have a plan, try to stick to it as best we can. Um, and then there was a good comment in here in the chat, and I think it was in relation to oil and the likelihood of oil staying higher throughout the remainder of the year. And I just wanted to talk about it from a standpoint of context because, Brent, when we looked at oil before, and I'm just going to mention this and then we're going to move on to some stocks in the news. The idea of oil remaining elevated is not elevated versus where we are now necessarily. It's the fact that we have elevated versus where we were prior to the conflict. So look at what our price range was before. Yes, it started to
Yes.
get higher, but it was 60 to 65 as it started to raise. Brent, we doubled the barrel cost, and now we're hanging out 50% up from where we were. So when we're talking about elevated, price of barrels, we're talking about over 70, 75 a barrel, which is still possibly 20 points down from where we are right now. So again, every little unwind could actually be a lift for the broader US markets.
No doubt. And if you when you listen to the news and people who know a lot more than I do about oil, the common narrative that I'm hearing, and they could be wrong, is that even if everything were to get sorted out, today,
Hmm.
oil's not going back down to the $60 level very super quickly here.
Right.
And so uh, doesn't mean it can't go down, doesn't mean it can't go down to 80 or 75 or something like that. But going down to those levels that we saw latter part of last year, it seems like a less likely scenario here going forward. So it's when you're looking at the price of oil, look at it in the context of both longer term and where we've been over the past couple months.
Well, yeah, and that makes perfect sense, right? We have to. If we don't, if we don't apply proper context, we're bound to make some mistakes here. That's what we want to avoid. So, okay, gang, let's take a look at some of these stocks we have in the news. We're in our final 10 minutes or so. We have some upgrades in some areas, and then we had one that wasn't upgraded but is moving, I believe, on its earnings detail. But I'm going to pull it up because it's making a pretty significant move today, and that's GE Vernova, Brent. So I'm going to pull this up. GEV had been in a bit of a kind of a bull flat situation here after rallying out of a consolidation. And that bull flat has resolved itself bullishly, sir. Real nice move. And what you're seeing here is their earnings were out on an overnight basis, it looks like here, or first thing this morning, I should say, and being very well rewarded on their details. And I'm going to look up those details. But Brent, talk to us about this move because
Yeah.
this is really continuing this trend strongly.
So even before the earnings announcement, the trend was strong. Higher
Oh yeah.
highs, higher lows. We were already above the 20-day moving average. But of course, earnings can change everything. In this case, earnings like confirmed the strength that people
Yep.
foresaw in this. It not only it gapped up, we're above where we gapped up to. We're off the highs of the day, but it's just there's nothing bearish about this right now from a
No.
technical standpoint. But at some point things reach their valuations, and we're at $1,100, on this, um, and so a little pullback probably wouldn't be a shocker here on this, but that even if we do get a shorter term pullback, that doesn't change the trend. It doesn't change the strength that we're seeing in
Right.
there. Not only do we have the trend, that white line you've drawn where the gap was is potential
Yep.
support. Also, just from a real short term period standpoint, today where the top of the gap is potentially some support as well, that if that holds, that's a very that'd be a very nice sign too there on that. So a lot of
Yep.
intraday traders and shorter term traders would be looking for that to hold, even if we get a little bit of a pullback.
So more than anything, Brent, I think what I want our traders, our viewers to watch here is this discussion around what these significant levels can offer us. Again, it's not that the stock can't go down, but we do have new levels for thoughts and for areas to base our risk. And gap moves commonly provide that for us. We don't know if this gap gets filled. It's about a 100-point gap. We don't know if we trade back through 1,070 to the downside at any point. We don't know if it's going to be held in its entirety going forward. We will see from time to time a positive earnings result that leads to a gap that just doesn't get filled for years, Brent. This can, in fact, happen. I don't know how this one's going to go, but it's important because we want to remind ourselves about what can happen in these trends. The stronger the trend, the more likely the trend is to continue. Remember, time has a lot to do with that. So the longer a trend has been in play, the stronger that trend is considered to be. And if you can add in any narrative with it at the same time, well, then you've got kind of a multiple pronged approach that's giving you bullish optimism. So you've got a company giving excellent return details in terms of their results, their guidance, and they fit into the AI conversation quite well also. So you got a lot of positives there. Doesn't mean that it has to go higher, but as my buddy Lee Bull would often say, new highs are not bearish, Brent. So try not to fight against what we see here, right?
Yep, exactly.
So, Brent, this one's not on the news, not at least not in my headline news, but we've been asked about it. I thought this is just too interesting to ignore. Let's look at Avis. If
Yeah.
you can believe any chart that's going to kind of blow your mind. If you've not been watching Avis, everybody, well, you're going to be a little shocked. So Avis used to trade not that long ago in a neighborhood of about 150 to 200 a share. We have it trading today at 753. This stock has been undergoing a short squeeze. Happy to share with you a little bit of knowledge about it, but my understanding, Brent, has a massive short position, at least up to weeks ago it did, and a couple of
Yes.
hedge funds decided, well, we're going to try and see if we can't stick it to those shorts, and they just acquired every single share of that was available in the market, and it led to a short squeeze. And what's happening here is that all those shorts have been forced in to buy the market price so that they can cover their risk, and that's what leads to maneuvers like this. This is an extremely risky chart. We're not showing it for any other reason than just to discuss what a short squeeze is. That's what it looks like we're having here, Brent.
Yeah, it illustrates a point that we talk about some, but you see less often. But imagine yourself, you've shorted a stock. Now, one of the things with shorting stock is it's an unlimited risk strategy because there's no upper limit to what a stock could go to. But let's say you think, I think this company is going to go down. It's, I don't know, $100 a share. And so I'm going to sell it for $100 a share, hopefully buy it back at a cheaper price, $50 a share down the road when the financials or whatever turn south on it. But you're looking at it and you have this obligation and the stock starts going up and it starts going up and up and up and up and up again. And then you're going, hey, I sold this for $100 a share. It's now $200 a share. It's now $300 a share. I'm in trouble. I've got to cover my position. So then what I do is I'm going to go, I got to limit my risk at some point. So I got to buy that stock back. Well, what happens? I'm adding more buying pressure to the market to cover my short position. What is that doing to the stock? It's helping to propel it further higher, which is putting another person who's in a short position in a kind of a precarious position as well. And they may do the same thing. That is what your short squeeze is.
It's exactly it. And, so there's a question here. This many people are short a car, and it's not so much that it's how many individuals are short. It's the amount of money behind the short. And more importantly, the risk that is on the table. Remember, when you buy a stock at $150 a share, it can only fall from 150 to zero in theory, right? So the most you can lose is the amount you put onto the position. But if you're short and you have unlimited risk and you're selling it short, as Brent said, at $200 and forced to buy it back at 500, well, that's gone exponentially against you. And at this point, we're trading at over 700. I mean, the moves here are just ludicrous. So be careful, be cautious. The likelihood is this company is going to take advantage of this ridiculous move that is not sustainable and probably do some sort of offering whereby they will, likely dilute the position a certain amount. They're going to take some dollars in. It's a good way from a business standpoint, Brent, in all likelihood, to generate some income for the portfolio of their bottom line and give themselves some money to work with, and they can do that through some kind of offering. So I think that should probably be something that traders are thinking about, if you're trading this one, because again, we're certainly not encouraging it, because this is about as risky a maneuver
Yeah.
as you're going to find in the market. I just found it to be too interesting to ignore from a discussion standpoint.
Yeah, you can see that risk implied with the implied volatilities right now. Friday's
Hmm.
IV 466%, and then 300% next week, and so on. So just crazy,
It's crazy.
crazy risk.
So there was last thing here was just a question about the question mark on the chart. This is a question mark because we've not been confirmed for earnings, but it should be on or around that window on May 7. That's what the question mark is letting us know. It just has not been confirmed just yet. And George, you nail it once more here at the conclusion. The market can remain irrational longer than you can stay solvent. Absolutely love that one. It's a healthy reminder of why we're traders and why we need to properly position our sizes for our trades individually. They're super important. I hope everybody got something out of this class, Brent. As always, a wonderful discussion. Thanks for picking up my slack the last couple of days as well. I appreciate it.
I always love filling in for you, but I even love it more when you're back, Kevin. So, and I'm grateful for Barb as well in the chat as always.
Absolutely. Thank you, Barb. Remember to follow us on X, everybody. If this discussion was helpful for you, hit that thumbs up button below for us. We've got the survey link there pinned to the chat as well. We'd love to hear from you. Don't forget to keep it tuned right here to the Schwab YouTube channel we call Trader Talks for the remainder of your day. We're going to be live. So look forward to catching up with you all again real soon. Thanks, everyone.